Hi guys, I hope you all are well. Today we are going to discuss about AML, that is anti-money laundering. In this video, we will be covering that what is AML, objectives of AML is money laundering process, AML controls, its fundamentals and various other things. So let's start with it. The first thing that we are going to talk about is that what is AML. Anti-money laundering is a set of policies, procedures and technologies that prevents money laundering. It is implemented within government systems and large financial institutions to monitor potentially fraudulent activities. AML laws necessitate that money related institutions report any monetary wrongdoing they recognize to applicable controllers. So basically, AML is a set of policies, procedures, and technologies that prevent money laundering. And the money and AML controls include knowing your customers, software filters, and implementing holding periods. The next thing that we are going to talk about is the objectives of money laundering. So the main objectives of money laundering includes to deter criminals from feeding their illicit funds into the financial system. And the second one is criminals use money laundering to hide the true source of their money that has been derived from crimes. So these are the main two objectives of anti-money laundering. That is, they include to prevent criminals from feeding the illicit funds into the financial system and to and to prevent them to hide their true source of their money. The next thing that we are going to talk about is money laundering process. So there are three segments to money laundering process. The first one is placement, second is layering, and third is integration. So the first one is the placement stage, that is filtering. The stage represents the initial entry of the dirty cash or proceeds of crime into the financial system. In this stage, the criminal relieves himself of holding and guarding large amount of bulky cash, and the money is placed into the legitimate business financial system. Money launderers are are the most vulnerable at this stage, as placing large amount of cash into a legitimate financial system may raise suspicions of officials and he may get caught. The second is the layering state, that is camouflage. The layering state is the most complex and often entails the international movement of the funds. Here, the illicit money is separated from its source. This is done by sophisticated layering of financial transactions that obscure the ordered trial and serve the link with the original crime. The third one is integration stage, that is investment. The final stage is where the money is returned to the criminal from what seemed to be legitimate source. Having been placed initially as cash and layered through a number of financial transactions, the criminal proceeds are now fully integrated into the financial system and can be used for any purpose. For example, the purchases of property, artwork, jewelry, or high-end automobiles are common ways for the launderer to enjoy their illegal profits without necessarily drawing attention to themselves. So these are the three segments of money laundering process, that is placement, integration, and layering. In placement, the money launderers introduce his legal proceeds into the financial system. In layering stage, the money launderers convert the proceeds of crime into another form and create complex layers of financial deals to disguise the audit trail. And the last one is integration stage. In this stage, the launderers place the laundered proceeds back into the economic to create a perception of legitimacy. The next thing we are going to talk about is AML controls. So the various AML controls are criminalization, know your customers, record management and software filtering, holding period, and new technology. So, the first one we are going to talk about is criminalization. Many government, financial institutions, and businesses impose controls to prevent money laundering. The first is criminalization by the government. The United Nations Convention Against Transactional Organized Crime has set forth guidelines that help governments to prosecute individuals involved in money laundering schemes. The second is know your customers. Financial institutions must also have know your customers policy in place to prevent money laundering. This process in monitoring the activity of clients and understanding the types of transactions that should raise red flags. Financial institutions are required to report suspicious activity to a financial investigation unit. The third one is record management and software filtering. Financial institutions and businesses also keep detailed records of transactions and implement software that can flag suspicious activity. Customer data can be classified based on varying levels of suspicion and transaction denied if they meet certain criteria. The fourth one is holding period. Many banks require deposit to remain in an account for a designated number of days, usually 4 to 5 days. This holding period helps manage risk associated with money being moved through banks to launder money. The fifth one is new technology. The technology used to identify suspicious activity linked to money laundering continues to evolve and become more accurate. Technologies such as AI and big data software allow the system to become more sophisticated. So these are the various controls of AML that includes criminalization, know your customers, holding period, new technology, and various other. These controls tell us that the financial institution and business keep the record of the customer's activity so that they can get to know if the customer raises any red flags. And also they keep the records of all the data and transaction of the customers and employees as well, so that if anything wrong happens, anything goes wrong, they can get to know. Even the holding period, many banks keep the money on hold for the account usually for 4 to 5 days to know about any suspicious related to the money. And the new technologies, there are various technologies that can help to know the help to know the money laundering activities, such as AI and big data software allow these systems to become more sophisticated. The next thing that we are going to talk about is AML fundamentals. So AML fundamentals include written policies, compliance officer training and review. The first one is written policies. Don't try to wing it. AML compliance is not something you want to improvise. Think policies through carefully, state them clearly, and have it written out for all, that is executive staffs and regulators, to see. What are your identification policies? What reports are you creating? What is your record retention policy? What regulations are you complying with, and how? What are your communication procedures? The next one is compliance officer. Who is the person responsible for the program? Designate one individual to know the system and ensure that processes are followed and updated. Reports are filed, training is correct, and that the system is running smoothly. Consider a senior level individual who has the power to influence the money on these matters. After all, there is a lot riding on the success of the program, both from a reputational and financial point of view. The third one is training. Every employee who deals with customers or transactions in any way needs to understand your company's policies and procedures. They need to understand the legal requirements, techniques used by the money launderers, check they should make, and how to report suspicious activities. Training isn't a one-time thing. Look at the refresher programs to keep staff vigilant and informed to ensure program is up to date. The last one is review. It's easy to become complacent if everything is running smooth. Why change? Unfortunately, by the time you notice a problem, it might be too late. Have an independent expert, such as a third party or at least someone who is not associated with day-to-day compliance operations. Review your program on a periodic basis. So these are the four fundamentals of AML, that includes written policies, compliance officer training, and review. They tell that the company should write their policies very clearly, and they should ensure that the policies are clear to everyone. The policies should be written for everyone. That includes staff, executive, and the people at the higher level. The compliance officer, there should be an officer who should keep check on this operation, who should keep check on the AML AML operations. Third one is training. This includes that the employees who are related or who deals with customers and transactions in any way should be trained about what is money laundering and how they can report about suspicious activities, and how to talk with the customers, how to deal with all these things. The last one is review. These are the business and financial institutions think that their system is going well, that everything is running smooth, so they shouldn't change it. But this is not the case. When they will get to know the problem, it might get too late. So they should keep a third person or someone who is not related to this AML operations, so that they can review their system and can tell about the improvement that should be made in the systems. The next thing that we are going to talk about is anti money laundering and FATF. Anti money laundering laws entered the global arena soon after the Financial Action Task Force, that is FATF, was created. The FATF was responsible for the creation of most anti money laundering standards, and it made a framework for countries to follow. After putting this framework into effect, the FATF then began to systematically identify countries that did not have proper legislation regarding money laundering. This name and shame tactics helped motivate countries to alter their legislation and start properly enforcing the policies that were in already placed country. The FATF counts member 37 member countries. So this is FATF, the one who is responsible for the creation of most anti money laundering standards. They check about the legislation, that which country is having the legislation, or they made frameworks for the countries to follow. They identify countries that did not have proper legislation regarding money laundering. Currently there are 37 countries that are member of FATF. The next thing that we are going to talk about is AML in banking. Given that financial institutions play such a pivotal role in the world of financial crime, it is important that they are properly trained on how to identify and handle money laundering. Almost every bank employee receives training in anti money laundering, and all of them are legally required to report any suspicious activity. Additionally, new anti money laundering software increasingly used to help detect potential criminal activity that bank employees may not notice. So, AML is important in banking because banking is the last sector that deals with money laundering. So, the employees of the bank should be well trained to deal with this, and we deal with money laundering, and they should be trained so that they can report about any suspicious activity. They can get the hint of suspicious activity, and also laundering software are used to help detect criminal activities. Now, new New anti-money laundering software are increasingly used to help detect potential criminal activity that the bank employees may not notice. The next thing that we are going to talk about is anti-money laundering and UNODC. In addition to the FATF, the United Nations Office on Drugs and Crime also proactively tries to identify and stop money laundering. This office has an informative website that provides facts and details about money laundering, as well as how it can be spotted and prevented. The UN Office on Drugs and Crime also provides software that can be used to help prevent financial crime, collect data, and perform analysis. The World Bank also provides information on its website about money laundering, as well as offering a plethora of advices to help both government and private enterprises end the money laundering epidemic. So UNODC is just like the FATF. They also deal with the. They also provide the information regarding money laundering and how it can be spotted and prevented. Whereas the World Bank also provides various information related to money laundering on its websites and give various advices to both governments and private enterprises so that they can prevent the money laundering to happen in their institutions and the businesses. The next thing that we are going to talk about is what does a business have to do to stay AML compliant. An anti-money laundering compliance program combines everything a company does to meet the compliance norms. Build in internal operations, user processing policies, accounts monitoring and detection, and reports of money laundering incidents. The aim of an AML compliance is to detect, respond, and eliminate inherent and residual money laundering, terrorist, financial, and fraud related risk. To develop a strong ML compliance program that helps expose bad actors and stay safe from non-compliance fees, business have to follow set of quite few requirements. So, and all anti-money laundering programs are aimed at the revelation of fraud, money laundering, tax evasion, and terrorist financing within a company. These goals can be achieved through three most important must do. That is the sophisticated reporting, detecting risky customers, and compliance officer. The first one is effective reporting. That is sophisticated reporting. A powerful reporting system helps to immediately deliver the information about a money laundering activity to the relevant authorities. The second is staying aware of high risk customers. Business must evaluate their clients' risk profiles and process them accordingly, applying enhanced due diligence, customers' due diligence, etc. measures. The third one is compliance officer. A compliance officer in the team, the process we are talking about is not easy to manage and requires a trained employee who would have the experience and the knowledge to keep the business in close compliance with ever changing laws and regulations. Compliance must be the moral responsibility of every team member across all organizational structures. Staff must be trained to formulate and report their suspicions. So these are the main things that these are the three things that a business must do to stay AML compliant. That is that they should report, they should be good, they should have effective reporting, that they should report about the suspicious activity immediately to their higher authorities, and they should keep a check on the high risk customers. If they should keep a record of the customers profile, then they should check them properly, their background as well. So if there any suspicious occurs, they can they can take actions immediately, or they can tell to their higher authorities. The next one is compliance officer. As we have talked about the AML procedures, we know that the AML operation is not very easy. It requires a person who have a great knowledge of AML and can be a good guidance to everybody, who can keep the check on their operations and tell what improvements should be done so that the money laundering operations can be prevented. The next thing that we are going to talk about is the important factors that determine AML compliance. So the important factors that determine the AML compliance is anti-money laundering laws in their jurisdiction and fines for non-compliance, possible suspicious activities that will indicate to money laundering. That is, these are the factors that can determine AML compliance, that we should have the proper laws for the anti-money launderings, and the possible suspicious activities should indicate the money laundering. The next thing that we are going to talk about is how to develop the program. We have made up a guide containing the key components and a summary of all the steps needed to develop an effective compliance program. The first one is detecting suspicious activity. The first goal is to quickly expose money laundering associated activities. Abnormally big sums of money deposited on an account. The second one is the lack of information submitted to open a bank account. The third one is fake data found in the application. The full list of suspicious triggers could be found here. Based on recommendation 20 of FATF, if a financial organization has reason to suggest that certain funds were accumulated illegally or are linked to fraud and terrorism, it must shortly report the suspicion to a financial intelligence unit. The second one is risk assessment. ML and TF risk assessment can help you score and sort customers into threat tiers based on the evaluation of the risk they pose. To develop a scoring model, assume common risk factors, high risk countries, PEPs, UBOs, due diligence results. The second point is the due diligence process, which should be based on the risk assessment and determined by the relevant AML jurisdiction. The third one is internal process. internal practices to handle ML, that is money laundering and TF risk, and maintain regulatory compliance. Financial entities have to help to develop and implement internal guidelines regarding information sharing within the organization. Make due diligence your focus point. Every financial institution has to have due diligence procedures that follow both their own and their customers' compliant demands. The second is assign rules and responsibilities wisely. Business must assign an AML compliance officer or a money laundering reporting officer to take over all things compliance. The third one is report suspicious activity. Suspicious transactions must be reported to the management first. Then, based on the evidence at hand, the MLRO is supposed to decide whether it is necessary to report it to the appropriate FII or FIU or not. The fourth one is teach employees to spot and properly react to ML and TF activities. The employee training program has to be designed to meet the requirements of the company and should be scheduled in accordance with the changes in legislation or after a criminal case takes place. To properly protect their work, banks and e-wallets should have internal controls across all departments and branches. The fourth point is prevention of criminal attempts, training to spot criminal attempts. For compliance officer to understand their roles and obligation, an AML training program should be carried out regularly. Who to train? High risk department, those where staff comes into direct contact with clients, compliance and audit teams, and senior management training topics. The first one is journal information. The consequences of failing to maintain money laundering and terrorist financing, as well as the information of spotting and stopping these financial crimes. The second word is legal framework. Detailed review of anti-money laundering regulations. And the last one is AML penalties. An overview of penalties for failure to adhere to anti-money laundering laws. How to train on site or online through third parties or with the help of experienced employees. Then we can use various methods, that is educational presentations and webinars, interactive e-learning modules or regular staff's meeting, updating anti-law laundering controls and guidelines as well. The fifth one is independent audit. A review by an independent auditor is a great way to spot the weakness in the company's risk assessment and compliance program. KYC, that is now know your customer due diligence procedures, compliance training, monitoring and reporting systems. By reviewing audit reports, companies can evaluate the effectiveness of implemented changes. Financial regulators, in their turn, use such audits to reveal the violation of AML laws. Section 59.2 of the New Zealand AML CFT Act obliges companies to carry out an independent audit every 2 years or upon a supervisor request. So these are the various stages to develop a software. The first one is that detect suspicious activity. The main goal of the company or the financial institution must be to detect the suspicious activity if they found any. Suspicious activity includes big sums of money deposited into account or lack of information submitted, fake data found in applications. The next step is risk assessment. That is, they should assess the risk including related to our customers or their activities. They should divide the customers on the basis of the evaluation of the risk they pose. They can divide the customers using a score model also. And the second point is that the due diligence process, this can also be done so that they can get to know about the risk related to any customers or the employee. The third one is internal practices. The third step includes internal practices, that is, make due diligence your focus point. And the second one is assign roles and responsibilities wisely, report suspicious activity, teach employees. So these are the things, that is internal practices, that they can teach employees related to the money laundering. And they can also assign role and responsibility wisely, that who can take this responsibility of money laundering and who cannot. And they make due diligence, they should be their private main focus. The fourth one is training to spot criminal attempts, that they can train their employees to spot the criminal attempts. And how there are three things that includes that: who to train and how to train. So the who to train, that is the employees who are related, who are open to the high risk, that is, who deal with the customers and transactions in any way, they should be trained. And they should be trained by the journal information, AML penalties, and these topics. They should be trained about these topics. And how to train, they can be trained by the educational presentations or webinars, by the regular staff meetings, or by updating anti-money laundering controls. Then the last one is independent audit, that the companies and the businesses should have an independent audit. They should have a independent auditor who has a great way to spot the weakness in the company's risk assessment and compliance program. The next thing that we are going to talk about is why is money laundered and what is the need to launder the money. A major business program of large organized criminal enterprises such as drug smuggling operation is that they enter with huge amounts of cash that they need to conceal in order to avoid attracting investigations by legal authorities. The recipients of such large amounts of cash also do not want to have to acknowledge it as income, thereby incurring massive income tax liabilities. To deal with the problem of having millions of dollars in cash obtained from legal activities, criminal enterprises create ways of laundering the money to obscure the illegal nature of how it is obtained. In short, money laundering aims to disguise money made illegally by working it into a legitimate financial system such as bank or business. So these are the main needs of the money launderer, that is to hide their wealth. By getting money from illegal activities, they have millions of dollars with them. So to prevent them to prevent them from getting publicly to the police and to the other authorities, they hide their wealth through money laundered. They can also prevent taxes. They don't pay taxes by laundering the money. They increase their profit, and at the end, that the main need for money laundering is to disguise money made illegally by working it into a legitimate financial system such as a bank or a business. The next thing that we are going to talk about is money laundering process and what are the methods of money laundering. So the first method is currency smuggling, second money complicity, bank complicity, currency exchange, security brokers, blending of funds, asset purchase. There are various other methods also, but we are going to talk about these six methods. The first one is currency smuggling. This is the physical illegal movement of currency and monetary instruments out of a country. The various methods of transport do not leave a discernible audit trial. The second one is bank complicity. This is when a financial institution such as bank is owned or controlled by unscrupulous individuals suspected of convening the drug dealers and other organized crime groups. This makes the process easy for launderers. The complete liberalization of the financial sector without adequate checks also provide leeway for laundering. The third one is currency exchange. In a number of transactional economies, in the liberalization of foreign exchange markets provide room for currency movements, and as such, laundering schemes can benefit from such policies. The fourth is security brokers. Brokers can facilitate the process of money laundering through structuring large deposit of cash in a way that disguises the original source of the funds. The fifth is blending of funds. The best place to hide cash is with a lot of other cash. Therefore, financial institutions may be vehicles for laundering. The alternative is to use the money from illicit activities to set up front companies. This enables the funds from illicit activities to be obscured in legal transactions. The last one is asset purchase. The purchase of assets with cash is a classic money laundering method. The major purpose is to change the form of proceeds from conspicuous bulk cash to some equally valuable but less conspicuous form. So these are the main methods of money laundering that include currency smuggling, that transfer of currency from one country to another, or bank complicity, that if the bank who is owned by some person who is already fraud, then it makes for the easy for launderers to do the money laundering. Currency exchange as well, while currencies are exchanged within the countries. There are a number of transactional economies. The liberalization of foreign exchange markets provide room for currency movements and benefit launderers. The next one is security brokers. The security brokers help the launderers to exchange, to hide large amount of their to hide large amount there of cash and to disguise the original source of the funds. Blending of funds. This is the best way to hide the cash with a lot of other cashes. That is, they get mix the cash with the other cashes so that they can that the illicit activities to be obscured in legal transactions so that they can convert their illegal money into the legal one. The last one is asset purchase. This is a very simple method, that is they convert their cash into an asset that is valuable equal to the money but that is less conscious. So this is all in the video for today. Thank you for listening to me. Have a nice day.